and gentlemen, good day and welcome to Divgi TorqTransfer System Limited Q2FY26 earning conference call hosted by Equirus Securities. As a reminder, all participants' lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Mihir Vora from Equirus Securities. Thank you and over to you, Mr. Mihir.
Hi, thank you. Good afternoon, everyone. On behalf of Equirus Securities, I welcome you all to the Q2FY26 post-result call of Divgi TorqTransfer System. From the management side, we have Mr. Jitendra Divgi, Managing Director, Mr. Virendra Divgi, Whole-Time Director, Mr. Sudhir Mirjankar, CFO, Mr. Satwinder Singh Sabharwal, Chief Growth Officer, and Deepak Wani, CEO. I will now hand over the call to Jitendra, sir. Over to you, sir.
Yeah, thank you, Mihir. Good afternoon, everyone, and a warm welcome to our Q2 and H1 FY26 earnings conference call for Divgi TorqTransfer Systems. On behalf of my team and the organization, I want to express my appreciation for your time and interest in joining us today for this discussion on our performance for the quarter and half year ended September 30th. As Mihir mentioned, I'm joined by my colleagues Virendra Divgi, Executive Director, Sudhir Mirjankar, CFO, Satwinder Singh Sabharwal, our Chief Growth Officer, and Deepak Wani, our COO at Divgi TorqTransfer System, and also SGA, our Investor Relations Advisors. I hope you've had the chance to review the results and the investor presentation, which are available on the stock exchanges as well as our company website. So I would like to begin by highlighting an important milestone on our strategic initiative to deepen our presence in key international markets. This particular point was alluded to in our previous earnings calls, and I'm very pleased that these efforts are now beginning to translate into tangible outcomes. I'm pleased to share that our long-standing focus of taking our legacy product line, which is transfer cases, to global platforms has achieved now a very, very significant and major milestone. We have secured a nomination from a very leading Japanese OEM that is a market leader globally and in particular in Southeast Asia to develop the transfer case for their iconic pickup truck platform with SOP starting from H1 FY28. This is a highly strategic win for us, given the OEM's strong global presence and the overall scale of this particular platform and the models that come off it. As part of the development cycle, we have already built a proof of concept unit, which is undergoing some testing on one of our vehicles. Early performance results have been encouraging and are helping us refine the product for the upcoming validation phases. The idea is that we will first focus on localization for the Indian market, and as we consolidate on our operations and quality, we will plan to expand supplies to regional markets around India. This nomination is not only a major milestone in our global expansion journey, but is a very strong endorsement of our engineering depth, product reliability, and manufacturing capabilities. It further strengthens our position as a competitive and credible supplier in the international drivetrain market, opening the door for additional opportunities with global OEMs in the future. Looking at our financial performance for the first half of the year, I'm really pleased to share that your company is not only firmly back on track, but has significantly accelerated now its improving performance. In Q2 FY26, we achieved our highest ever quarterly revenue of 88 crores, taking our H1 total income well beyond 160 crores, representing a strong 39% year-on-year increase. EBITDA came in at 41 crores, up 35% from the previous year, while PAT rose to close to 20 crores, delivering an impressive 43% year-on-year growth. Overall performance also strengthened quite meaningfully. Better capacity utilization drove better cost absorption, resulting in enhanced profitability. Gross margins remain healthy at over 60%. EBITDA margins are in excess of 24%, and the PAT margin is improving and currently at around 12%. Exports, this was most encouraging, contributed nearly 16% in H1 and more significantly over 20% in Q2FY26, helping us make progress towards a medium-term target of 20 to 25%. Overall, the business continues to demonstrate resilience, operating efficiency, and consistent execution across key parameters. I will now take the time and opportunity to go into individual segments of our overall business. On transfer cases, we delivered a strong performance in the first half, growing 42% year-on-year and demonstrating continued momentum in this vertical. This has been driven by sustained volume offtake from our main anchor customer, which is Mahindra, but also additional customers like Tata and Force Motors, with monthly averages now at par with FY24. We expect to surpass FY24 transfer case volumes and are well positioned to accelerate further growth in the coming quarters. During the quarter, we also saw a volume-led price correction, based on the agreed contractual threshold, which you could interpret as a healthy sign that reflects sustained demand and strong long-term volume visibility. The segment's performance was further supported by increasing adoption of four-wheel drive systems in the market and the successful launch of new customer models. And this continues to expand the addressable opportunity for our transfer case portfolio. Looking ahead, our focus for the transfer case segment remains on accelerating growth across both domestic and international markets. On the domestic side, we are actively collaborating with leading OEMs on many of their upcoming platforms, and on the export front, we are making meaningful progress in globalizing our transfer case portfolio. As shared earlier, we have secured a nomination from a leading Japanese OEM to develop the transfer case for their iconic pickup platform, which is a significant milestone in our international expansion efforts. As part of our long-term strategy, we are also evaluating the feasibility of establishing a manufacturing footprint in the US market to support future growth and deepen our global presence. We expect this study to reach some sort of a conclusion before March end 26. Shifting to now the EV transmission segment, the performance remained muted on a year-to-year basis, a trend that has continued over the last few quarters. EV volumes in the market were subdued during the period, resulting in range-bound sales for our EV transmission business broadly in line with the previous quarter. However, we expect volumes to improve meaningfully in the second half as we commence production and supplies of the new Sigma platform to our key customer Tata. With deeper integration across multiple EV platforms, we anticipate a strong volume ramp-up in H2, while also maintaining the current run rate of volumes on models that are already there, which should strengthen the growth outlook for this segment. Broadly, we are expecting about a 20 to 25% improvement in volumes on EV transmissions. Moving forward, our key priority for the EV transmission segment is to enhance capacity utilization by expanding into newer platforms. We remain closely aligned with emerging growth opportunities across both domestic and international markets. And we are actively seeking out opportunities in the United States and in Europe. We remain closely aligned with emerging opportunities, as I said, in both domestic and international markets. So on the export front, we are expanding our global reach to engage with international OEMs like Ford and Tesla, also Toyota, aligning with their evolving platform requirements and strengthening our presence in key geographies. Moving on to the components business, which has been led primarily by exports. This has been consistently increasing its share in the overall mix over the last 6 months. As was indicated towards the end of calendar year 24, when we had said that in 25 we will begin to see an uptick in the export business. The segment continued its strong momentum throughout H1, delivering a stellar almost 100% year-on-year growth in H1 FY26. This performance was primarily driven by volumes from our major Tier 1 export customers that include BorgWarner and Magna, reflecting the growing acceptance of our components in global markets with iconic pickup truck and SUV manufacturers around the world. Export markets remained encouraging despite global uncertainties arising from recent U.S. tariff actions. Coming to U.S. tariffs, I want to highlight that we do not foresee any short-term impact of these actions on our components business. India, despite this action, continues to remain competitive in the light-duty application segment in the United States, where, and I want to emphasize this, the duty structure is not 50%, but limited to 25%. The other thing that adds resilience, I think, to our business is we operate in niche segments, and the specialized nature of the components that we supply, where the parts are highly engineered, both from a design standpoint as well as the design of the manufacturing system that is needed. And therefore, these are not easily substitutable. What truly differentiates us in the markets we operate in is our ability to deliver far more than just simple components. These are precision parts, highly engineered, with a high standard of metallurgical science involved. We have consistently demonstrated our capability to provide integrated high-value solutions that combine logistics all the way to the doorsteps of our customers in all over the United States. And so the overall value proposition continues to remain quite compelling. We have a strong pipeline of opportunities under development on the export side, both for new business acquisition and for engineering next-generation components. Over the past few quarters, we have successfully diversified our revenue mix and continue to make focused efforts to expand our export portfolio across multiple markets and geographies, including markets like Portugal, Austria, and Germany. These initiatives are progressing well across these markets, and I expect it to be important drivers of our export-led growth over the next few quarters and years. Several new products are currently in the approval stage, and we anticipate many of this to be converted into firm orders in FY27. Demand for critical components across both domestic and international markets remains steady, and the prospect of an imminent trade deal with the United States, which has been in the air for some time now, will only further strengthen our business prospects. I now want to switch to a few remarks and observations about the next generation transmissions that we are working on. So this continues to be a key sort of focus for us, because our long-term growth strategy is expected to come from here. FY26 has been a year of steady progress on this front, and we are now at a stage where in the automatic transmission domain, the likely advent of tightening emission norms are bearing down on how automatic transmissions are designed and integrated into vehicles. And in order to sort of leapfrog this dynamic market, we have made a decision to go straight to 8-speed transmissions instead of 6 or 7-speed transmissions. And given the commonality that exists between, to a significant extent, between manual transmission, the manual transmission ecosystem in India, and what is needed for dual clutch automatic transmissions, we have elected to work with dual clutch technology, wet clutch dual clutch technology for the passenger segment in India. We have submitted quotations and drive trials with the type of technology that we intend to deploy in India. Drive trials are currently underway with OEMs in India to demonstrate the superior performance, shift performance, but also the considerable improvement in fuel economy that we are expecting. On commercial truck applications, we are investigating rear-wheel drive automatic transmissions that complement our line of transfer cases from pickup trucks to light commercial vehicles. In our manual transmission business, our focus continues to be on strengthening relationships with existing OEMs and providing end-to-end strategic supply chain solutions. As mentioned in our previous earnings call, we have received a significant RFQ for a 5-speed manual transmission from one of India's largest commercial vehicle OEMs. Building on that, discussions have progressed further, and we are now engaged in deeper evaluations to align product requirements with our manufacturing and engineering roadmap. Additionally, we have submitted proposals to a second OEM in tandem with our 4-wheel drive transfer case. So this is an integrated transmission transfer case value proposition, further strengthening our positioning in high-value drivetrain systems. These initiatives collectively reinforce our objective of maintaining a competitive and future-ready position in the conventional drivetrain space, even as the industry transitions towards hybrid and electrified architectures. So with that, let me bring my opening remarks to a close. Before I conclude, I want to highlight another important achievement for us this quarter. A few weeks ago, we showcased our state-of-the-art drivetrain and transmission solutions through actual exhibits at the Mahindra SUV Proving Tracks, MSPT as it's called, at a place called Chayar in Tamil Nadu on the occasion of the Mahindra Technology Day. This platform allowed us to demonstrate our advanced engineering capabilities, next-generation technologies, and the depth of our product portfolio to key members of Mahindra top management. And this included drive trials on vehicles into which some of our products had been integrated. The response from the OEM's leadership and technical teams was highly encouraging, further strengthening our engagement and reinforcing our positioning as a trusted, innovation-driven partner for Mahindra and Mahindra. FY26, I'm pleased to note that has begun with a good dose of vibrancy, marked by robust execution, deeper customer engagement, and meaningful progress across many of our strategic initiatives. We remain focused on driving sustainable growth, enhancing operational efficiencies, and expanding our presence across both domestic and global markets. The opportunities ahead are substantial, and we believe we are well positioned to capitalize on them. The near future holds many exciting possibilities, and we look forward to sharing further updates with you in the upcoming quarterly earnings calls. So with that, let me conclude my opening introductory remarks and hand over the proceedings to my colleague and CEO of our company, Mr. Sudhir Mirjankar. Thank you very much.
Thank you, sir. Good afternoon to everyone on the call. Before presenting the financial numbers for the Q2 and H1 of FY26, I would like to highlight a few key points. We begin the new fiscal year with robust volumes in Q1, and I am pleased to share that we successfully sustained this momentum through H1 of FY26. The growth has been broad-based across our two major segments, transfer cases and components, both of which continue to demonstrate strong traction. Our transfer case business benefited from healthy volume uptake from key OEM customers, while our component segment, which is predominantly export-driven, continued its strong upward trajectory as global demand for our high-precision components remained steady. So speaking on financial performance of H1 FY26, for H1 FY26, our total income stood at 165.1 crores, marking a 39% year-over-year increase from 118.6 crores in H1 FY25. This growth was led by sustained momentum in transfer case volumes throughout the first half and continued robust performance in component business. So on revenue mix, the transfer case segment delivered strong growth of 42% year-on-year compared to H1 FY25. We witnessed healthy volume traction in Q1, and this momentum continued through Q2, as well driven primarily by higher offtake from our key OEM customer. We remain confident that this momentum will continue in the coming quarters. The EV transmission segment declined by 5% in FY of 26 compared to H1 of FY25. The segment has been largely range-bound due to subdued EV volumes in the market. However, we expect a ramp-up in the second half of FY26, supported by stronger customer offtake and deeper integration across newer EV platforms. The component segment continued its robust performance, growing 113% in H1 FY26 compared to H1 FY25. This exceptional growth was largely export-led despite global market uncertainties. We expect this momentum to sustain in H2 of FY26 as well. Exports continue to steadily increase its share in the overall total income mix. In H1 FY26, exports contributed around 16% of total income, and we are progressing well toward our medium-term target of 20 to 25%. Gross margins for H1 FY26 stood at 63%, expanding by 119 basis points over H1 FY25. This improvement was primarily driven by higher volumes and a favorable sales mix, with increased contribution from high-margin component exports further supporting overall profitability. EBITDA for H1 FY26 came in at rupees 41 crores, registering a healthy 35% year-on-year growth from rupees 30.5 crores in H1 of FY25. The improvement was largely supported by a better product mix and operating leverage benefits arising from higher volumes, which resulted in improved absorption of fixed costs. EBITDA margin for the period stood at 24.9%. Profit after tax for H1 FY26 stood at rupees 19.7 crores, reflecting a strong 43% year-on-year growth from rupees 13.8 crores in H1 of FY25. This performance was driven by enhanced operating efficiency and higher volumes in major segments, leading to further strengthening of overall profitability. PAT margin stood at 11.9%. Coming to the quarterly numbers, in Q2 of FY26, we delivered our highest ever quarterly total income of rupees 88.3 crores, registering a strong 49% year-on-year growth from rupees 59.2 crores in Q2 of FY25 and a 15% sequential growth over Q1 FY26. EBITDA for the quarter stood at rupees 22 crores, reflecting a 33% increase from rupees 16.6 crores in Q2 of FY25 and a 15% sequential growth over Q1 of FY26. EBITDA margin for the quarter was healthy at 24.9%. Profit after tax for Q2 FY26 came in at rupees 10.7 crores, marking a 37% year-on-year increase from rupees 7.8 crores in Q2 of FY25 and a 20% sequential rise from rupees 8.9 crores in Q1 of FY26. PAT margin for the quarter stood at 12.2%. This consistency in performance reflects the strength of our product portfolio, the resilience of our customer relationships, and the disciplined execution by our teams across functions. With the visibility we currently have the opportunities in the pipeline, we expect this positive momentum to continue in the coming quarters as well. That's it from my side. Now I would like to open the floor for questions and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mahesh Bendre from LIC Mutual Funds. Please go ahead.
Hi sir, thank you so much for the opportunity. Sir, we have released a press note which mentions that we have won a contract from Toyota Tsusho. It's I think 62 crores of contract. So does this for Indian vehicles or is it for their international operations?
Yeah, thank you for asking that question, Mahesh, because it gives me the opportunity to clarify many things. So this is in collaboration with, as the press note suggests, Toyota Tsusho, which in itself is a big deal for us. But the OEM is not Toyota. Because of non-disclosure agreements, you will appreciate I cannot divulge that detail right now. But it is an iconic pickup truck maker of the world. The platform that we are working on is a global platform, okay? And it is a market leader right now in Thailand and ASEAN. The global volumes of this platform and the models that the OEM